I'm joined today by Paul Welch, CEO of Buccaneer Energy. Thanks for joining me, Paul.
Thanks for having me. It's great to be here.
So, Paul, perhaps you could give listeners a brief overview of the business.
Okay, so Buccaneer Energy is an oil and gas producer. We're focused in onshore Texas. We have assets in, South, East, and West Texas. Our primary asset is in East Texas. It's the Pine Mills field, and we produce about 120 barrels a day across the portfolio of assets. The great thing about being in onshore Texas is that our operating costs are low, and so our netbacks are high. So at current prices, $65 a barrel for WTI, we have an average profit per barrel of $50. So it's a very good place for us to operate.
Hmm. Okay. Well, you've just raised 600,000 via a placing. What are you planning to do with those funds?
So what we're going to do with the funds we just raised is we're going to drill two development wells in what we call the Falk area of the Pine Mills field. So the Pine Mills field, as I mentioned, is our kind of our premier asset. It was discovered in 1949, so it's quite an old field, and it was developed, for the 20 years after that. But in 2021, in the southeast corner of the field, they drilled a well called the Falk 1. And the Falk 1 came in at 140 barrels a day of dry oil, so no water. And to put that, kind of in perspective for your audience, in the main part of the Pine Mills field, our wells average between 6 and 20 barrels a day, and they have very high water cuts. So here, we found an area of the field that was essentially at original reservoir conditions. And then we followed it up in 2022 with a second well called the Falk 2, and that also came in at 140 barrels a day at original conditions. So it's in that area of the field where we're going to drill these two additional development locations. And so the question your audience might ask is, why? Why were these wells not drilled earlier?
Hmm.
And that's because in 2018, a 3D seismic program was shot over the field. And so after that was interpreted by the G&G team, they recognized there was an isolated barrier or a fault block that separated the Falk area from the main part of the field. And so in understanding that, we drilled the well, the Falk 1, and that's what came up with the discovery. So that isolated fault block, which is separated from the main part of the field, still has some room in it for two more locations, and those are the two wells we're going to drill with the money we just raised.
Hmm. Okay, so you have existing producing assets. What does current production in total look like then, and what further production do you anticipate adding to that number from the further well developments at Fook?
So currently we're producing 120 barrels a day across the portfolio of assets. Each new Falk well will add 40 barrels a day net to our total. So that'll take us from 120 to 160 to 200 barrels a day. So the question your audience may have is, okay, if we're drilling these wells that are coming in 100, 120, 140 barrels a day, why are you only getting 40? And it's because we farmed out that part of the acreage to another company to get the first well drilled. We were carried on that first well, so we only have a third of the barrels that are produced in the Falk area. So that's why we'll get net 80 barrels a day from the two development locations. And again, that will take us up to just over 200 barrels a day of production. The interesting thing about the Falk area, which I didn't mention up front, is that because we don't produce any water, and we're in a very, kind of a very isolated part of the field, our operating costs there are less than $5 a barrel. So at a WTI price of $65, we make almost $60 per barrel in profit in this area.
Hmm.
So these wells are really important to us, and they're very, very profitable opportunity from our perspective.
Yeah. Well, that's some very healthy margins you've mentioned there.
Yeah.
So obviously, yeah, you are already generating cash flow, and with the further development wells coming online, that will increase. Can you give us an idea of numbers then in terms of like projected free cash flow generation? And does this mean the company is essentially at or reaching a point of being self-sustaining?
Yeah, we're definitely self-sustainable. So at the moment, at our current production rates, we're generating free cash flow between 45 and 50,000 dollars a month. Okay,
Right.
once we add the Falk 3 well, we'll then take that up to just about 150,000 bucks a month, and then when we add the Falk 4, that'll get approach 200,000 bucks a month in free cash flow. So that'll be a cumulative of $2.4 million per year. So we're in relatively good financial position. The Falk wells, when we drill them, have 7 month payouts because again the operating costs are
Mm.
low and the productivity is high, and they have internal rates of return of north of 300%. So I mean these are phenomenal opportunities, and again these are the types of things that we look for: mature fields that haven't had 3D seismic or haven't had some technology put to them, and we can come in and there's existing infrastructure in place. So when you make a discovery, you can turn it on in a month, and your operating costs are low because everything's in place.
Mm.
So these are the type of opportunities that we like to pursue.
Yeah, yeah. Okay, so some healthy numbers there. I mean, on the oil and gas side, then obviously, which is your core business, what is the company's growth strategy? So, I think I've seen some targets somewhere. I'm not sure if it was a presentation or an RNS of, trying to get to something like 5,000 barrels of oil equivalent per day, which is quite an uplift from where you are now.
Yep.
How do you plan to achieve that?
So again, we're that's our 3 to 5 year target for the
Mm,
business. We're going to get that through a combination of development opportunities, like we're discussing with the Falcon, where we can add, 100 barrels a day very profitably, and then through acquisitions for opportunities that are, strategic, accretive, in areas where people, probably have not spent the kind of capital they should in developing them. So it'll be a combination of those things. It'll be development of existing assets and acquisition of new assets. And along that line, we had expected to have announced something by now. I won't get into too many details, but
mm,
we had closed on an acquisition. We had agreed to with the seller. The seller had sent us a press release that's done, and on the other partner in the opportunity had 30 days to make a decision whether they wanted to essentially preempt us or not. On day 28, they let us know that they wanted this asset, and we had negotiated a good price. So unfortunately, that one didn't come together. We had already had a press release sent to us by the seller saying, "Yep, it's yours. You're done." So anyway, we're going to continue to look for those type of opportunities because we think they're out there. The softness in prices over the last let's say 6 months or so has really created opportunities for us, and so we're continually looking. And so again, it'll be that combination, finding an asset that's probably unloved, developing it, increasing production, and then moving forward. So it won't be just one big asset; it'll be a number of smaller opportunities we think along the way, but
mm.
focused primarily on onshore U.S., onshore Texas. That's what we're looking at.
Yeah, I'm guessing, from listening to what you're saying there, there could be some quite lucrative smaller assets that might not be interesting to bigger players, but for a company of your market cap size, offer meaningful development and revenue opportunity.
True, that's true.
Yeah.
I mean, there's like again because we're small, we kind of focused on a niche area. There are people that are smaller than us, private companies that maybe they're family owned and the family wants to get out of the business, and so they're selling. So there's a lot of those smaller type of opportunities around, but you don't need many of them to add up to a lot of new oil, particularly if they have upside potential. In the case of the Pine Mills field, it was discovered in I said 70 years ago. There are 5 producing horizons, and so even in our existing field, there are still behind pipe opportunities that we can come in and just for $5 or $10,000 shoot some perforations in a zone that's been there waiting to be produced. We can add 15 to 20 barrels a day. So there's a lot of opportunity in these old mature assets that people haven't really dug into. Not That's not always the case. There are a lot of very efficient
Mm.
operators out there, but some of the operators and some of the new technologies allow you to develop things that couldn't be developed before. So those are the type of things we're looking at.
Yeah, yeah. So changing tack slightly, you also recently mentioned in your RNS that you plan to implement a gas monetization strategy through Bitcoin mining. This sounds very interesting as a bolt-on for an oil and gas company. How will that work?
So yeah, so that's something that we just developed. It's so what we're doing. That's again in the Falk area. So in the Falk area, we have 2 producing wells. They're making combined about 100 barrels a day between them now. One is producing 60 barrels a day,
Mm,
65, and the other one's producing 30. The issue we have is that this part of the field produces some associated gas, whereas the main part of the field doesn't. And so we have to do something with that gas. And so the case of the Falk 1 well, it was close enough to the existing facilities that we could take the gas and essentially use it as on the top of the tanks to kind of keep the tanks in place. the storage tanks. So it allowed us to relieve the back pressure on the wells and essentially took a well from that was producing 30 barrels a day up to 60. In the case of the Falk well, we can't do that because it's Falk 2 well because it's too far away. So there's a bunch of back pressure sitting there. It's restricting production, so that well's only making 30 barrels a day. When we drill the Falk, the next development locations in this area, we're going to produce gas because as we've produced the field, the reservoir pressure has dropped, and we're producing more and more gas every day.
Mm.
The gas volumes are low from a like a let's call it an oil field commercial perspective. We're looking at about 200 MCF a day. And there's not much we can do with it because there's no local infrastructure for gas. And so the solution that we came up with is to essentially sell the gas to a Bitcoin miner and use that to essentially generate power, fire up the Bitcoin mining machines, and then take some payment through Bitcoin. So it's let's call it a novel solution. I would say it's an
Mm.
interesting solution. It's not. I would say in the majority of the world, it's not really done that much, but in Texas, it's done all the time. Since
Yeah.
about 2022, there's been a lot of these Bitcoin miners that have been set up to use what is essentially disposable or waste gas and just generate profit from it. So that's what we're going to do. So it will be a combination of generating power, getting a little bit of payment from Bitcoin, and moving it that way. So it's not like a change in our business. It's just another tool in our tool bag. So if we have gas that we can't sell commercially because the price is too low or it doesn't make commercial sense, we can't get a connection, we'll look to Bitcoin mining to generate profit from that gas.
Yeah, yeah. I was going to ask you if that was something new and pioneering you were planning to do. I've not heard of it personally, or or whether this was something that other oil and gas companies have done to, exploit essentially what is a waste product or a product you can't really sell back into the market. And it sounds like the answer to that is there are others doing it.
There are other people doing it, and it's truly a win-win because as you described it, it's a waste product. If I can't sell it, I really can't vent it. I don't want to flare it because that really hurts my ESG
Mm.
credentials. And so it's a good way to solve a problem that needed a solution. And it's not new, but I think a lot of the smaller operators do it. You don't see many of the big operators doing it because they have big infrastructure in place to handle the gas. It's a lot of the smaller companies that are doing it to generate a little bit of additional margin for something that was essentially a waste product as you described it. So for us, it's just a new and a different opportunity, and we think it'll be pretty profitable.
Mm. So obviously, you can take this product and you can partner up with this Bitcoining partner, whoever's going to be doing the mining. You would get payment in Bitcoin, as you said. Do you see as a company Bitcoin? I mean, plenty are starting to gravitate towards Bitcoin treasuries, for example. Do you see it as a strategic asset, Bitcoin, or is it simply really a way of just sort of generating using the waste product, generating Bitcoin, and then you'll just sell it, or would you actually consider, implementing a treasury?
Well, we're going to implement a treasury function to accept the Bitcoin and put it on our balance sheet. So we need,
Yeah,
you need to be able to secure it, store it securely, and then trade it. So we will set
yeah,
up a Bitcoin treasury function there. We're not going to become a Bitcoin treasury company.
yeah.
We use the Bitcoin as a strategic asset because you can lever against it. You can do certain things that you can't,
Mm,
just necessarily with cash. So it's an opportunity. It's also evolving, so something that we talk about today may be different from tomorrow. So we'll see how it goes.
mm.
It's just I view it as a value store. So we have value in dollars, we have values in pounds,
Yeah.
whatever it may be. This is a slightly different version of that, but it's something that is, I think, going to be transformative as we move forward, and we're happy to be part of it. So it's early days for us, but we will
Mm,
set up a Bitcoin treasury function just to handle it properly. So we have all the procedures in place. The boards approve them. They have to get reviewed by AIM, the regulator. So that's all been done. So it has to be handled properly. That's all in place. But we're not going to be a giant Bitcoin,
no. Yeah.
player. That's for other people to do. We're an oil and gas company that has a monetization strategy that involves Bitcoin. That's, I think, the best way to describe it.
Yeah, so it's a nice sideline business, but I mean the
Sure.
from an investor's perspective, the story of Buccaneer is about take, the growth of the company on the oil and gas side.
Correct. Yeah, that's
Yeah.
really was. And again, with Bitcoin mining, essentially we do everything at the moment, up to the point of Bitcoin mining. So we have generators, we generate power, we burn
Mm.
gas in these things. We maintain these things. So it's just that next step of adding the Bitcoin mining machines, and cooling them that we haven't done, and that's something that a contractor can do.
Yeah.
And so we're in the process of discussing, how that's going to work. But before we get too far ahead of ourselves over our skis here, we need to drill these two wells and make sure that we have the gas available to make it happen. So there's a
Absolutely.
few steps in the process before we get there.
Yeah. So that was my next question, I guess, was in terms of roadmap. Then, what does with funds now in place, what does the next
Yep.
3 to 6 months look like in terms of development and news flow?
So for us, looking forward, we're gonna drill two wells. So the first well should be spud late September, early October, depending on rig availability.
Mm.
Assuming that's successful, we'll connect that, start producing it in late October. The next well we expect to drill would be again in December. That would be on in January. And so, assuming those two things are successful, then we would view the Bitcoin mining operation kicking off in the first quarter. So it wouldn't be in January, probably kind of, middle part of the quarter. So those are the three things that will happen. And then during that process, we hope that, we'll do an acquisition or so, something else to add to the portfolio. The other thing that's going to
Mm.
happen as well is that throughout the spring and the summer, we've had a tremendous amount of weather, rain and storms in
Mm.
East Texas. And so we've had a bunch of trees fall because our biggest asset is called Pine Mills, and there's a lot of
Yeah.
pine trees there. So we had a lot of storms come through and knock out power. And so we had, the field up and down, up and down. And so we lost a couple of ESPs. So as part of this next program, we're going to also turn some ESPs back on. So we have probably at the moment about 20 to 25 barrels a day of production that's shut in. And so, hopefully that will come back on in the next month or so, and bring us back up to where we should be, which is around, about 140 barrels a day now. So we've had a little bit of weather issues, but those are common. Unfortunately, this was more weather. It was twice the amount of storms that we've seen over the last 30-year
Mm.
period. So we had 2x the volume of rain, and so part of our field is in a what they call a bottom or in a creek bed, and so it flooded like crazy. So anyway, we've been fighting a little bit of
Yeah.
the weather gods for the last few months, but they're thankfully behind us, and so now we're going to get back to business as usual.
Well, we in the UK could do with some of that rain, to be honest. We've not had much, so
Okay, well, we
send
can
it our way,
export
please. Yeah,
that.
but the golf courses are really drying up, which is the most annoying thing for me.
That's these things
Um,
happen.
yeah, yeah. Well, look, Paul, thanks very much for joining us today. It sounds like you've got a busy period coming up with the development, the drilling, and bringing the wells online, and possibly an acquisition as well coming along. So, thanks very much for joining me, and hope to chat to you again in the near future.
All right, thanks for your time. I appreciate it. Thank you.